So in 2016, this current amount is at the beginning of the year, right? And then on that same 2016, there was a revaluation amount. So what do we do when there's a revaluation amount? We ascertain whether there was a revaluation gain or loss. So what do we say? We will say this figure 1143,031 minus 135,000. Okay. So to know the difference here, we are not looking at subtracting the bottom value from the current amount or the revaluation amount from the current amount. What we are trying to look at is the fact that between the current amount and the revaluation amount, which one is higher, which one is lower, and then you subtract the lower from the higher. That's what we are trying to do. We are not saying because it's at the bottom, we are going to get a negative value. No. When we get to revaluation or revalue an amount against the current amount, we compare both and look at which one is higher, which one is lower or lesser. So between these two, 155,000 is higher. So 155,000, and we'll take the lower value from the higher value. It gives us a value of 2969. This figure here, it's the higher of value. So since the revaluation amount is higher than the current amount, we will say that there has been a gain. And we just repeat the name here. Revaluation gain. Revaluation gain. Why? Let's assume the current amount or the balance on an amount is 144, 114, and 31. And then after we want to revalue the property, assuming there's a UPS as a property, then after revaluation, or the cost of the asset after 3 years or 1, 2, 3, 4 after 4 years was 114,031. If you want to sell the assets, let's say we want to sell the assets, we did what is called a market value, and the market value said that we can sell before we can do a market value. We have to conduct revaluation from a surveying firm, all right? From any of the quantity surveying firms, and they gave us a revaluation amount of 135,000. What it means is that this is the current cost of the assets after we have less out our depreciation charges for how many years? 4 years, 2012, 13, 14, 15. So if we want to sell our assets, it should have either been at this cost or lesser. But after the surveying or the valuation, we saw that the assets will be sold at, let's say, 135,000. When we sell it, are we going to have a gain or a loss? We're going to have a loss. We're going to have a gain, by the value, meaning we had a revaluation gain more than the carrying amount, which is the balance on the cost of the assets. I believe you are okay with it. So this is a revaluation gain. Right. What's the next question?
Management of the company are. Sorry, let's start with the question.
Let's see the reply.
A. Determine the carrying amount of the office building as at 31st December 2015.
Alright, so the first question which we were required to solve was what? Determine the carrying amount of the asset or of the office building as at 31st December 2015. So don't forget, this carrying amount is what? At the beginning of the year. So you can say this is 1st January. 1st January. Let me put the date. Then depreciation is at the end of the year. So also 31st December. Then the carrying amount is obtained at the end of the same year. 31st December. Therefore, the first question is that what is the carrying amount at the end of 31st December 2015? Therefore, you will say from the question. Let's come into the question. Let me find this. It's correct. I'll write it down there. Therefore, the carrying amount at the end of 31st December 2015 is 114,031. That's the carrying amount from the first required question. Are you good? Good. What's the next? The B question.
Account for the revaluation surplus or loss for 31st December 2017 and 31st December 2018.
Okay. Meanwhile, this is for 2017, 2018. Meanwhile, in 2016, which I first wrote, Ghana cedis, there was a revaluation. So we'll come in with the carrying amount. What I initially wrote. What the carrying amount? 114,021, and there was a revaluation. Remember, all these are happening on the 1st of January of the year, right? On the 1st of January. So let me write it this way. 1st January. All these are happening on the 1st January. Then we have it to be 135,000. So again, don't put a jacket or bracket on the second. There's no need. I'll explain how you can determine the evaluation gain or loss. So the difference here is 2969, which is a revaluation gain. Alright? So this is a revaluation gain. Okay. And the second question says we should determine, read the question again, the B.
Account for the revaluation surplus or loss for 31st December 2017 and 31st December 2018.
So account for the revaluation gain or loss for what? 31st December 2017 and 2018. Meaning that in 2016 we got a revaluation gain. Though the question didn't answer to find the revaluation gain in 2016, I solved it to establish something. To understand that when they revalued the property on the 1st January, there was a revaluation gain. So, again, in 2016, don't forget, the current amount was 114. The current amount was what? 114. And then there was a revaluation amount in 2016. Therefore, what do you think will be the actual amount of the asset in 2016? What will be the actual amount or the actual cost of the asset in 2016? Will it be the carrying amount or the revaluation amount? Will it be the carrying amount or the revaluation amount? It will be the revaluation amount. So we will call the revaluation amount what? Carrying amount. Carrying amount. What is the revaluation amount? 135,000. Here we only found the revaluation gain or loss. Don't the first big access, but we found it. Then 2016, this will be the carrying amount. And then, what did the question say after in 2016? The policy of the firm with respect to depreciation changed. Right?
Yeah.
Initially, they were using what?
5%.
5%. Now, which percentage?
4%.
4% reducing balance. Effective when? 2016. So, we compute the depreciation for 2016 here. Right? Right? Which will be what? 5 over 100 times. 4 over 100 times what? 135,000. That's when we start. So what's the value we're going to have? $5,400. Right? Then here we let's start and find the difference, which is 129,600. So this is the carrying amount at the end of 2016. Then we move on to 2017. So this is the 1st January. This is 31st December. I 31st December, let me write it call. 31st December. Then in 2017, the carrying amount begins. Then what is the cost? 129,600. Right?
And in the question, management of the company adopted the revaluation model and revaluation for subsequent years are as follows. So 1st January 2017, it was 130,000.
Okay, so 1st January 2017. So look at the date. It was not 31st. If it was 31st, you complete depreciation. Right? 1st January, let me write the date. 1st January, we have carrying amount. Right? Then 31st, the same 1st January, what do we have? Revaluation amount. What's the revaluation amount for? 1st January 2017.
130,000.
130,000. So, as I've explained earlier, we find a difference between this and that. We compare with the revaluation amount and current amount. Which one is higher or value? The current amount, the revaluation amount is higher or value. If the revaluation amount is higher or value, then we subtract the lower from the higher. What's the difference? 400. This becomes what is called what? Is there a gain on revaluation or a loss on revaluation? So long as the revaluation amount is higher than the current amount, there is a gain on what? Valuation or revaluation. Therefore, we say revaluation gain. Don't forget, the valuation of the property was the initial cost. That's the valuation. But the subsequent measurement is what? You revalue means you recost it. Value talks about amount. So when I say value, it's talking about the work. It's talking about what? The cost. So value is you are recosting the property. This is the original or initial recognition, initial value. Subsequent measurement means going forward, we need to change the costs. And which models are we applying? We are applying the cost model, which involves what? Here in particular was what? Depreciation. And then from 2017, they are no more charging depreciation from 2017. What are they charging? What are they using? Which model are they using from 2017? Revaluation. So the first, from 2012 to 2015, they'll be using cost model, the cost model. That is where we're taking out the depreciation. But from 2016 or from 2017, they are now using what? The revaluation model. I hope you understand it. Do we understand it? Rita, what's your answer? Now, this is just an add-on or an add-on to what I'm teaching. How do you determine whether it's a revaluation gain? How do you determine whether there's a revaluation gain or loss? When the current amount, let me use current amount, right? Let me use CA for the current amount. So when current amount is less than revaluation amount. So when current amount current amount is less than revaluation amount, right? Or when revaluation amount is greater than what? Current amount. All this gives you what is called revaluation what? Gain. So you must always compare. When the current amount is less, as in this case, when the current amount is less, is it less than revaluation amount? Is the current amount less than revaluation amount? You get a revaluation gain. Is the revaluation amount greater than the current amount? Do you understand it? What do you have? Revaluation gain. So whenever the current amount is less than the revaluation amount, you have a revaluation gain. When the revaluation amount is greater than, it's the same thing. They're all the same. Because if this is less than this, it means this is greater than that. Are we good? Are we good? 2. This is I. When current amount is greater than revaluation amount. It is when current amount is greater than revaluation amount. In other words, when revaluation amount is what? Less than current amount. We good? So when current amount is what? Is what? Okay, so when revaluation amount is less than current amount, what do you experience? Revaluation loss. So this rule should guide us in terms of determining the revaluation differences. But from the right going back, revaluation amount is what? Less than current amount. That's what I'm written here. What do you have? Revaluation loss. So over here, the revaluation amount is 130,000, which is what? More than the revaluation amount. So revaluation amount is greater than carrying amount. Revaluation amount is greater than what? Carrying amount. What do you have? Revaluation gain. Are we good with it? Are we good? So you always compare the two values. Are we good? Okay. So, madam, read the question for us. No, the revaluation figures. That portion.
So management of the company adapted the revaluation model and revaluation subsequent years are as follows. First, January 2017, the amount was 130,000.
So in first January, the revaluation amount was 130,000. Don't forget, so this first January. Continue.
And in 2018, first January 2018, the amount was 112,000.
Okay, so in first January 2018, first January. So in first January, pay attention. This revaluation amount becomes our carrying amount. You don't use the old one. It becomes the carrying amount. The C. What is it? 130,000. Are we good? Are we good? Are we good? Then, on the same first January, there was a what? Revaluation was amount. 112,000. So, what's the person asking us? The B. They are still the B. Are you good?
Account for the revaluation surplus or loss for 31st December 2017 and 31st December 2018.
The person is asking us to account for what? The revaluation surplus or what?
Loss.
Or loss. Don't forget, revaluation gain is the same as revaluation what? Surplus. Are we good? Are we good? And we have revaluation what? Loss. So these two, are we going to, what is the difference? Pay attention. What's the difference? We told you that whenever you have a cost or a carrying amount, and you have a carrying amount and you have a revaluation amount, you first look at the two figures. Look at the two figures. So these two figures, what are you going to have? Don't tell me the comments or the description. Which value are you going to have here? $18,000. Pay attention. Pay attention. So Rita, 18,000. What will be the comment? Looking at this group here. Rita, looking at this group, what will be the comments there? What's loss? Revaluation loss. Why? Because the carrying amount is greater than the revaluation amount. The carrying amount is greater than the revaluation. So we're going to have a what? Revaluation loss. So the person is asking us what is the big question again?
Account for the revaluation surplus or loss for 31st December 2017 and 31st December 2018.
So these are the two. We finished with the first one, which was in 2015, what was the carrying amount? That was what we did in 2015. Are you? Now, this is the B part of the question. The B part of the question. The B part of the question is that we've gotten 2016 here, and we look at the revaluation amount, the same first January, got the revaluation gain. They didn't ask us to complete that. We completed because they gave us revaluation amount in 2016. Then we moved to 2016, completed depreciation. Then in 2017, first January, there was no depreciation because they did not use the assets in 2017. That is the reason why I didn't complete 4% depreciation. But we completed in 2016 because you have to complete the depreciation in 2016, find the carrying amount, which becomes the opening cost or opening balance or balance brought down on the asset. Then we didn't charge depreciation in 2017 because it was in the same first January they did what? Revalue the assets. Assuming this revaluation occurred on 31st January, then we would have charged depreciation because they did assets from 1st January to December. You charge the assets with the depreciation amount and then do the revaluations. But here the revaluation was on the 1st. Do we comprehend it? Do we comprehend it? So do we comprehend it? The revaluation was on the first, so we don't have to charge depreciation. And we found the revaluation gain. Then we come to 2018 to, we are going to see carrying amounts, the same first January, assuming this revaluation was done at the end of the year, meaning we complete what? Depreciation. Then when we find the carrying amount at the end of the year, we will then bring the revaluation amount and compare it against the what? Revaluation amount. But here, the same revaluation was done on the first January. So no need for what? Depreciation. Precious, are we good? This is the revaluation loss. Now, let me add C. The question I only what? A, B, C. Okay? So, as part of the 2018 and 2017, let me do my DR and what? CR. So, that's what they are trying to say. What I'll first do is, in 2017, I write 2017. I will. Since we experienced a revaluation gain, what did we say we do? When we talk about IAS, as we all know, this is the accounting. We have assets, expenses, and losses. We have liability, income or what? Gains. And what do we have? Capital or what? Equity. We say that all assets have debit balances. All expenses or losses have what? Debit balances. And all liabilities have what? Credit balances. So in 2017, when we revalue the assets, this is what they want us to do. So after some time, you have to go and do the last one. You have to do what you are trying to do to complete the big answer. So when we revalue or we analyze the 2017, we got a revaluation gain. The main question we ask ourselves is, this revaluation gain is reported under a certain type of account. Are you getting it? And that account is called a capital account. Because revaluation surplus is the name of the account, and that account is reported under what? Capital or equity account. It's added to changes in equity. You do? So where do we record gain on the T account? Is it on the debit or credit? Is it on the debit or credit? On the credit side, we record what? Gains. So we will bring the name of the account, which is what? Revaluation, what? Surplus. What's the amount? That's revaluation surplus account. That's the name of the account. Watch. Revaluation surplus account. How much is on the account? What's the gain? 400. We record gains on the credit side. So what do we have? 400. Are we good? Are we good? Then, which assets? What's the name of the assets you are working on? The real account. What's the name of the real account? Office building. So you will make it what? Office building. They should slant. Right? So office building what? Account. How much is it? 400. This is a double edged tool. What the person is actually in is, after you find the gain and the 2018, you have to show their treatments by using the double edged tool. So revaluation surplus account is credited because it's a gain. Then office building is what? Debited. To satisfy the double edged tool. So we record gains on the credit, we record losses on the debit. Now that's for 2017. When we go to 2018, what happened in 2018? Was there a loss or a gain? A loss. The question says, show how we should account for revaluation surplus or what? Loss. So in 2017 there was a what? A surplus, a gain. The gain, revaluation gain is reported under what? The revaluation surplus. Then revaluation loss accounts. Are we good? So how are we going to treat this in 2018? Where are losses recorded? Debit side, right? So revaluation loss, let me remove it this way. We'll say revaluation loss. Let's say revaluation loss account. I know. It's also another surplus account, but we less it out. I know. So losses, we record losses on the debit. Now that is for 2017. When we go to 2018, what happened in 2018? Was there a loss or a gain? A loss. The question says, show how we should account for revaluation surplus or what? Loss. So in 2017 there was So there was a what? A surplus, a gain. The gain, revaluation gain is reported and award. The revaluation surplus. Then revaluation loss account. Are we good? So how are we going to treat this in 2018? Where are losses recorded? Debit side, right? So revaluation loss, let me remove it this way. We'll say revaluation loss. Let me say revaluation loss account. I know. It's also another surplus account, but we less it out. I know. So losses, revaluation loss. What do we say? How much is the difference? 18,000. Then what is the other corresponding account? Bill, office building is asset account. So office what? Building account. How much? 18,000. So losses. This is how you should treat it as part of what? B. Are we good? Are we good? Good. Now, let me commence this part. The next question I want us to treat is preparing. How do we treat this in the asset account? I